Good afternoon. Welcome to GrainTV. My name's Cody Bills. This is Logan Burgess. Today is Thursday the 2nd, and it is export sales report day. Let's turn right over to the Fire Tip trading platform, see how those numbers affected today's trade. Corn for July trading up 15 1/4. Soybeans down 3/4 cent. Wheat in Chicago trading up 7.5 cents, and Kansas City wheat trading up 8.5. Logan, I think that the export sales really did have an effect on the way this trade turned out at the end of the day. What were the numbers, and were there any surprises?
Yeah, absolutely. Let's jump into the slide here, kind of detailing what we saw this morning reported by the USDA. As you can see here on the old crop, corn and wheat, not a big story there, both in line with trade expectations. Soybeans, though, on the old crop, the big story. Once again, we had net cancellations here on the week. Net cancellations of 109,000 metric tons there. Certainly not good for old crop beans. And if we switch back over here to Fire Tip, I think as you mentioned, corn and wheat both had relatively strong days here. Old crop soybeans really had a hard time gaining any traction. Only grain here closing down on the day.
Yeah, absolutely. And one of the things that we talked about on Tuesday when we were both on the show is really, how this trade was reacting. We had a huge day on Monday. We had this pullback on Tuesday.
Right.
And the interesting thing here, let's take a look at the 60-minute chart. This is a candlestick chart. Each bar represents 60 minutes worth of price activity. This is the same chart that we had up on Tuesday during the show.
Right.
And you'll notice that we were talking about this price level right here as being a support level. And then we mentioned at the end of the day that the EIA numbers, the ethanol numbers, were a possibility when you consider the crush margin there.
Right.
We had strong ethanol numbers on Wednesday, and today we had pretty good sales for corn. And I think it's all contributing to a retest of this previous high.
Yeah, absolutely. I think if we turn over here to beans real quick, over to the next daily chart there, this candlestick chart here, old crop soybeans really, a few months ago was a real spot of strength here. The sales, though, that the U.S. has been getting has really dried up, though, in the last 2 weeks in particular. And on old crop beans, I wouldn't be surprised if we made another run at these lows here that acted as support. Certainly not a lot to pressure this market higher. If we turn our attention, though, to the new crop here for corn, soybeans, and wheat, let's take a look at our slide here, and you can see here on the right side here is the new crop sales. And once again here, corn and wheat, not a big story there. Reported sales were in line with trade expectations, but soybeans, very different than on the old crop. We saw huge new crop sales, much larger than what the trade was expected. So that's good. That's good, I guess, but there's still certainly a long time before those sales are going to be leaving the country. The big story today, bottom line, was the net cancellations on old crop beans. And let's take a look here at our model that we've been following throughout the marketing year. You can see here, soybeans really for the first part of the marketing year was on a tear, but things have slowed down here recently. Just in the last 2 days, we see that we had just in the last 2 reporting periods, we had net cancellations, and now soybeans are only, in our minds, about 75 million bushels ahead of pace to meet USDA expectations. That's down from 107 million bushels just 2 weeks ago. So, as I said, it really seems like the spigot has turned off here in terms of international export sales. The U.S. has a hard time being competitive right now.
Yeah, absolutely. And that wasn't too much of a surprise.
Right.
We've been talking about this for quite some time. We got a little bit lucky in terms of the fact that Brazil really had a difficult time moving their record crop onto the world market. They were having logistical problems, and that helped us get more sales pushed onto our books. But right now, it would appear that we are unable to win any kind of export sales.
Yeah, as I said, expect this to weigh on the bean market in general here for the next couple weeks. If we kind of change gears here, though, Cody, a big story here toward the end of the trade session, as we've been talking about this week, is the Kansas City wheat tour that's been going on today. They met at the Kansas City Board of Trade and released kind of their final expectations for this crop. Can you kind of break down the details there? I know Kansas City wheat in particular has been relatively strong here over the last couple of weeks.
Yeah, exactly. And, we were pretty strong today. We had a nice close for Kansas City wheat. We're making another run at that $8, but I think that the news release here from the Kansas City wheat tour is really going to affect the night session. I think that there's a good chance that we could see some selling pressure in the night session. We did see the wheat yield forecast at 41.1 bushels per acre, and that compares to a 5-year average of 42.3. Now, take a while there and let that soak in, because what we've been talking about all year long has been a wheat crop that has gone through incredible stress. The good to excellent ratings are way down. In the last month, we've been talking about winter kill scenarios and very unpleasant growing conditions for this Kansas City wheat crop. especially in the western part of Kansas. And they come out with a yield number that's just really not off that much. What I think they're doing here is we did get a production number as well, and the production number was 313 million bushels relative to the 5-year average, which is 341.3. And so I think what we're seeing here is significant abandonment of the acres that were planted, and that's allowing, that's kind of boosting the yield of the remaining acres, probably on the eastern part of Kansas.
Absolutely. Well, we have a table here that kind of details that, Cody. Do you kind of want to explain this here, what we're looking at? Just in general here, the blue bars at the bottom are those abandoned acres, and up top here what we're actually looking at is the harvest portion of what was planted. Can you kind of explain this to us?
Yeah, absolutely. I mean, if you look at the abandoned acres, this is implied based on the yield and based on the production results that this tour delivered today.
Yep.
And what you're seeing here is just, I mean, relative to last year, relative to the last 5 years, is a significant amount, and that's that green bar there, the 2003 Kansas City tour results. That's a significant amount of abandoned acres, and most of that is most likely simply because of the remaining drought from last year, and also the winter kill scenarios. You know, some of that crop was damaged pretty significantly.
Absolutely. If you guys have any questions about details there, the numbers that we saw in the Kansas City wheat tour, feel free to give us a call here at the office. Our number is 877-472-4607. Coming down the pipe tomorrow for the grain market, fundamentally, we don't have a lot of new news to be reported on. We do have some outside macro numbers that people are going to be watching very closely. Tomorrow we will get non-farm payrolls, and additionally we'll be getting the unemployment report as well. All expectations are for the unemployment rate to remain unchanged at 7.6%. So obviously that's going to be that's going to be affecting outside markets, and if we have a big surprise there, certainly we've seen it dribble over into the grains as well. If you want to watch the night session, though, for yourself here on the grain market, feel free to visit us over at grainhedge.com and take a no-obligation trial of the platform that we use here on GrainTV. I think that's all we have, though, here for Thursday. Cody, thanks a lot for joining us, guys. Have a great night. We'll see you tomorrow.